Hello and welcome to Trading Hour on CNBC TV 18. I'm Ekta Batra and with me is Prashant Nair. Well, it's turning out to be a solid start for the week to see the global markets and the rally that we saw in the US markets, the blowout jobs data, which really fueled sentiment along with statements coming in from the Fed. So currently the Nifty is up around 85 odd points. We have the advanced decline ratio, which is extremely steady in today's trade. So currently at around 1,200 stocks plus, advancing to around 560 stocks declining. Look at that breadth of the market sustaining from the start of the trading session. But a lot of stocks in focus, a lot of the private banks, a lot of the autos are gaining today. And separately, stock-specific news includes something like Titan, Yes Bank, and a couple of others such as Bharat Forge, which is at a fresh 52-week low, along with Shobha, which is spiking up despite sluggish numbers coming in there. Hi, Prashant.
Ekta, hi. Good morning. And I mean, if you remember on Friday, we were highlighting repeatedly the importance of the Powell speech, which was scheduled for, Friday US market morning. I think what the message was dovish, but I think what added fuel to the fire was that the speech followed the jobs report. I mean, the jobs number, which was actually absolutely great, came in first. So when the numbers, the economic numbers, data is very strong, you would actually expect policymakers to sit up, take notice and say, well, maybe we need to be cautious about spillover into inflation and hence what we need to do as far as rates are concerned. But here is a situation where you had extremely strong jobs numbers, and that was followed by this speech of Jeremy Powell, in which Mr. Powell essentially said, the Fed chair said, that nothing is on autopilot. I mean, it's all on the table, and we will depend on data, incoming data, to decide whether we need to increase rates or not. I mean, I think the sequence of events was also something to be noted very, very keenly, and that was a big factor for the way the market moved. Imagine if the jobs data had come after the Powell speech. Then the market would be speculating, well, okay, he said what he did, but then we got this extremely super strong jobs report. We don't know what the Fed is going to do, but now you know at least what their thinking is. They also said that they are listening to the messaging from the stock market very, very closely, something which we've been talking about, which we talked about on Friday as well. So this is clearly help from policymakers, the best of both worlds. Let's see if this will hold. Remember, the Fed chairman is scheduled to speak again on the 11th, that is this week, later, I think Friday. So, will he say something contrary to what he's already said last Friday? We don't know, but there is Mr. Powell who's speaking again, and there are a whole host of other Fed officials which the market will hear from through the course of this particular week. There is also, so this is essentially the two pillars on which this rally is built on. But there is, the US-China trade talks. There are meetings today and tomorrow in Beijing. There is the release of liquidity in China. Again, clearly aimed at mitigating the growth slowdown. And there is also some talk at the margin from President Trump himself saying that there might be a second summit as far as North Korea is concerned. But, that's just talk for talk. The big real factors were those jobs number and, of course, the messaging which followed, which was pretty dovish. Ekta.
Yes, absolutely. And we have those trade talks which are starting today and tomorrow. So that will be an important cue to watch out for. Some data coming out with regards to auto registrations from the UK. And that's down around 7% odd. So do watch out for that and any sort of impact or read through on a couple of stocks such as Tata Motors. But right now, Tata Motors is the top gainer on the Nifty. So completely undeterred by that news. Sudarshan Sukhani joins in to talk about the technicals of the market this Monday. Then, Sudarshan, hi, morning, over to you then. What would you recommend? Nifty comfortably above 10,800?
Yeah, good morning, Ekta. Good morning, Prashant. My recommendation is go long in the Nifty and the Nifty Bank. We are in a trading range. The markets are giving us a sense that we will break out of this range and go towards 11,100 or 11,200. These numbers cannot ever be precise. The theme is that the market is willing to go higher. And the same theme applies to the Nifty Bank. That is my view. So I am long, and I would suggest even at current levels there is a significant upside possible. So be long in both the indices. Individual stocks also are then mainly on the long side. This is not a market where you want to go short, but be prepared for volatility. We saw that last week, and that can continue. Slowly and steadily, markets should go up. For today, consider buying ICICI Bank. The bank has made a very impressive bullish pattern, a textbook bullish pattern, and broken out of it. So significantly higher levels are ahead. Similarly, Marico, an outperformer in the FMCG pack. So Marico is a buying opportunity. And finally, that big stock, Reliance. Reliance is now gone through a mild correction. It's rallying today. It's leading. So focus on the long side of the market. Reliance, ICICI Bank and Marico are buys.
Okay, we'll have those trades at the bottom of the screen in terms of the flashes for levels. We'll put the graphics up one more time. I think the last didn't come up. So those are the three trades. Sudarshan very clearly saying stay on the long side. That's the right side to be on at this point. Sudarshan, morning. We got some questions from viewers coming in as well. Rahul has 20 shares of Axis Bank. He's bought them at an average price of 620 rupees. Wants to know the way forward. I guess whether should continue to hold or sell. What would you say, Axis Bank?
You just hold on. Once you buy a blue chip stock and Axis is a blue chip, you do nothing with it. You stay on for 2 years, 3 years, and you'll be surprised at the gains you get. If you are a trader and if you're a short-term trader, still you stay on because I'm suggesting that this market has legs on the upside.
Would you apply that same logic to Yes Bank, which is gaining 1%, Sudarshan? That one's impacted by news.
No, it's not the same logic. Now, there is difference between Yes Bank and Axis or I would say completely avoid Yes Bank. You have these blue chip opportunities. Individual investors and traders can choose. They don't have to do something. So buy ICICI Bank, buy Axis, buy HDFC Bank. Don't touch Yes Bank.
All right. Sudarshan, thank you very much as always for joining us. Well, you can keep sending your questions to us and we promise to take them here at CNBC TV 18 News and CNBC TV 18 Live. Those are the two hashtags on which you should send your queries across. We promise to take them and put them to our experts as the day goes along. Well, 97 points on the Nifty, 10,825 is where we are at. Titan is gaining, is higher with large volumes. And the company released a business update for the third quarter, as always, and it expects 22% growth in the jewelry segment in FY19. Mangalam is here with the key highlights of that update. Mangalam, morning.
Morning, Prashant. So that's exactly what the company said, 22% growth in the jewelry segment, and that is something that the street really likes. So a couple of things that really stand out from the management commentary for the third quarter. First one is that across the business segments, they saw positive consumer sentiment coming along. That is good. Secondly, in the jewelry segment, which is the mainstay of the company, their growth came back on the growth came on the back of higher same-store sales growth, and that usually implies margin improvement. That is primarily because same-store sales growth-led growth would result in operating leverage. And then the third point, where 22% jewelry growth is something that the management has committed for or expects for FY19. That is a positive because, well, first half they've seen the jewelry business grow just at around that 15-16% mark, and 22% growth for the full year implies that the growth in the next 2 quarters would be upwards of 25, 27, 28%. Some brokerages estimating 30% growth in the next couple of quarters too. For the eyewear business, the company said the consumer sentiment was strong and they expect the margins to be lower purely on account of increased advertisement activity, and that is something that the management has been talking about from the start of this year. So the negative is known and the positives were unknown, which results in the stock moving higher. Brokerage is fairly sanguine. Morgan Stanley believes that this underscores their expectation of good growth, and Citi says 22% growth for the full year is slightly higher than their expectations of 21%.
Okay. Well, Mangalam, it's not only Titan, but ITC, which is in focus from the FMCG space, a brokerage note and a relief rally coming in?
That's right, a brokerage note and a pre-relief rally, if you must. That's because there was some commentary coming in from a lot of ministers, and ministerial panel has decided a 1% calamity cess to be levied under the GST regime purely in Kerala, and that is much lower than what the street was expecting in terms of the fear, because they were expecting the whole country to the cess to be levied in the whole country, not just one state, and the 1% mark itself is lower than what the street was expecting. So this is a bit of a relief, but we will await the details coming by in the meeting of the GST Council, which is due to take place on the 10th of January. Macquarie, on the back of that, they maintain their rating on the stock with a target of 376. They believe that double-digit EBIT growth and earnings growth is what will lead to the next move in ITC's stock.
Mangalam, thanks very much. So those are two names, ITC. in focus, and we are essentially going to keep getting you more perspective on that one. The other stocks in focus are Bandhan Bank and Group Finance. CNBC TV18 reported on December 21st that Bandhan is set to acquire Group Finance, and now we understand that Group shareholders will receive 3 Bandhan shares for every 5 shares of Group that they hold. Nisha Podar has been tracking that story. She joins in with the details. Nisha.
Thanks for that, Prashant. Of course, this particular deal has been in the works for a while now, is what we gather from our sources with direct knowledge, and that's exactly what we had reported. Now we hear that it's at a fairly advanced stage and the announcement is likely very soon. Now, as per the SEBI guidelines and the current market cap and the market price of both the companies, the reported swap ratio is around 3:5. And that's exactly what we had also alluded to. So what this means is that after the merger, Bandhan Bank will land up having a stake, or the promoters of Bandhan Bank will land up owning a stake of close to about 60% from the current 82%. And the primary reason for this particular transaction has also been to get closer to meeting the RBI's requirement of the promoter shareholding in Bandhan Bank. And it will not really fully comply, because 40% is what they had to reach in August last year, and they still will have to take more steps. So that's one of the big reasons for this transaction to go through. In fact, Bandhan Bank has been under pressure since this particular transaction has been talked about, because most of the analysts and the investors I speak to, they suggest that Group Finance, as far as the valuations are concerned, is on the higher side, and just for bringing it down and complying with the RBI guidelines, this could be an expensive deal for Bandhan Bank. That's the reason why the stock has been behaving the way it has been behaving. As far as HDFC Limited is concerned, the parent of Group Finance holds about 58% stake in Group Finance. Post the merger is complete, it will land up owning 15.5% stake. There again, there are 2 important bits to note. First, above 5%, they will need an RBI approval. They can go up to 10%, but above 10% may not be allowed. So HDFC Limited will have to shed anywhere between 5 to 10% stake in the merged entities. So this is a large transaction waiting to happen. In fact, announcement could be really expected very soon.
Okay, all right, Nisha. Thanks very much for that. Well, there is some news which is in fact coming in on Reliance Communication, where the Supreme Court has asked Reliance Communication to resolve past due issues with Jio before the spectrum sale. I think there was something more, with regards to Ericsson's contempt petition. So they've issued a notice to Anil Ambani on the same as well. I think this would be negative news which has actually come in for Reliance Communication, but the stock seems to have possibly spiked up a little bit.
Yeah, I mean, shouldn't make too much of these incremental moves, but can't be good news. So this is, the second
that's
contempt.
the reading right now. Yeah.
This is the second contempt notice which was filed, a petition which was filed by Ericsson in the Supreme Court, and this is with regards to dues of about 550 crores, which Ericsson is owed. So, the notice has been issued. We'll try and get in touch with Ashmit to talk about this and maybe provide some more details. But that is what we have at this point.